This week, gold prices have surpassed $4,000 per troy ounce, marking a significant milestone amid growing global economic instability. This surge is attributed to factors such as U.S. government instability, rising inflation concerns, and geopolitical tensions. Investors are flocking to gold as a safe haven asset, seeking to hedge against uncertainties in the financial markets. The unprecedented rise in gold prices reflects a shift in investor sentiment and a growing lack of confidence in traditional financial systems. Analysts suggest that the continued upward trajectory of gold prices could signal further economic challenges ahead. As the global economy faces mounting pressures, gold's role as a store of value becomes increasingly prominent. This development underscores the need for investors to reassess their portfolios in light of changing market dynamics. A new global study has raised alarms over a looming job apocalypse for entry-level workers as AI adoption intensifies. Business leaders increasingly prefer AI over hiring junior staff, with 41% reporting headcount cuts due to automation. This trend is deepening generational inequality and threatening the long-term resilience of the workforce. Simultaneously, the U.S. has opened a probe into 2.88 million Tesla cars over safety violations linked to its full self-driving system following a series of accidents. Meanwhile, Ørsted plans to cut 2,000 jobs amid U.S. project setbacks, and Jaguar Land Rover is recovering from a major cyber attack by restarting production. Financially, J.P. Morgan warned of a possible U.S. market crash, citing high AI valuations and geopolitical risks. UK inflation concerns persist, with the Bank of England advocating high interest rates to stabilize long-term consumption. A major financial crisis is unfolding as UBS, Switzerland's largest bank, grapples with losses tied to the collapse of First Brands Group. One of UBS's funds, UBS O'Connor, disclosed that 30% of its portfolio is exposed to the failed auto parts company, 9.1% directly and 21.4% indirectly, totaling more than $500 million in exposure. This development raises serious concerns about systemic risks in the fast-growing private credit market. Other major entities like Blackstone, Jefferies, and Onset Financial are also reportedly affected. Additional headlines include gold prices have surpassed $4,000 per troy ounce amid U.S. government instability. Former FBI Director James Comey faces criminal charges in court. Tesla introduced a cheaper Model Y version, while Verisure saw a successful IPO in Stockholm. OpenAI and Anthropic weigh using investor funds for legal settlements due to AI-related litigation risks. The U.S.-EU trade agreement faces strain as the U.S. pushes to revise EU regulations. The U.S. has opened a probe into 2.88 million Tesla cars over safety violations linked to its full self-driving system, following a series of accidents. This investigation marks a significant development in the ongoing scrutiny of autonomous vehicle technologies. Regulators are examining whether Tesla's self-driving features meet safety standards and adequately protect consumers. The probe could have far-reaching implications for the future of autonomous vehicles and the regulatory landscape surrounding them. Tesla has faced criticism in the past regarding the performance and safety of its self-driving technologies. The outcome of this investigation may influence public perception and regulatory approaches to autonomous driving in the United States. As the probe unfolds, the automotive industry watches closely, anticipating potential changes in regulatory frameworks and industry standards. Ørsted, a leading renewable energy company, plans to cut 2,000 jobs amid setbacks in its U.S. projects. The decision comes as the company faces challenges in securing permits and navigating regulatory hurdles in the United States. These obstacles have delayed key projects and impacted Ørsted's ability to meet its growth targets. The job cuts are part of a broader restructuring effort aimed at streamlining operations and improving efficiency. Despite the layoffs, Ørsted remains committed to its renewable energy initiatives and continues to invest in sustainable energy solutions. The company emphasizes that the restructuring is necessary to adapt to changing market conditions and ensure long-term success. Ørsted's move highlights the complexities and challenges faced by renewable energy companies as they expand into new markets. Jaguar Land Rover is recovering from a major cyber attack by restarting production. The attack disrupted operations and halted manufacturing processes, leading to significant delays in vehicle deliveries. In response, the company has implemented enhanced cybersecurity measures to protect its systems and data from future threats. The resumption of production marks a critical step in the company's efforts to return to normal operations. Jaguar Land Rover is working closely with cybersecurity experts and law enforcement agencies to investigate the source of the attack and mitigate any potential risks. The incident underscores the growing importance of robust cybersecurity protocols in the automotive industry. As the company navigates the aftermath of the cyber attack, it remains focused on delivering high-quality vehicles to its customers. JP Morgan has warned of a possible U.S. market crash, citing high AI valuations and geopolitical risks. The investment bank's analysts expressed concerns that inflated valuations in the artificial intelligence sector could lead to a market correction. Additionally, ongoing geopolitical tensions and trade uncertainties contribute to the overall risk landscape. JP Morgan advises investors to exercise caution and consider diversifying their portfolios to mitigate potential losses. The warning comes amid a period of strong market performance, raising questions about the sustainability of current growth trends. Market participants are closely monitoring developments in both the AI sector and global geopolitical affairs. The outcome of these factors could significantly impact market stability in the near future. UK inflation concerns persist, with the Bank of England advocating high interest rates to stabilize long-term consumption. Despite efforts to curb rising prices, inflation remains above target levels, affecting household budgets and consumer confidence. The central bank's stance on interest rates aims to control inflation, but also raises concerns about potential impacts on economic growth. Higher borrowing costs could dampen consumer spending and investment, posing challenges for businesses and households alike. The Bank of England continues to monitor economic indicators closely and may adjust its monetary policy as needed to address inflationary pressures. The ongoing situation underscores the delicate balance central banks must maintain between controlling inflation and supporting economic expansion. China has tightened rare earths export controls again, escalating tensions with the EU. The move restricts the supply of critical materials essential for various high-tech industries, including electronics and renewable energy. The European Union has expressed concerns over the impact on its manufacturing sector and is exploring alternative sources for these materials. China defends the curbs, stating they are necessary for environmental protection and sustainable resource management. The rare earths trade dispute highlights the geopolitical complexities surrounding global supply chains and the strategic importance of these materials. Both China and the EU are engaged in negotiations to address the issue and find mutually beneficial solutions. The outcome of these discussions could reshape global trade dynamics in the coming years. UK business confidence has fallen to a 3-year low, reflecting concerns over economic uncertainty and rising costs. Companies are grappling with challenges such as inflation, supply chain disruptions, and labor shortages. The decline in confidence may lead to reduced investment and hiring, potentially slowing economic recovery. The Bank of England's high interest rate policy aims to control inflation, but also adds pressure on businesses facing increased borrowing costs. Analysts suggest that the government may need to implement supportive measures to bolster business sentiment and stimulate growth. The current climate underscores the importance of policy interventions in maintaining economic stability and fostering a conducive environment for business operations.